The company here is Sysco. So that's not Cisco, C-I-S-C-O, the one that sells servers and computer software. This one is Sysco, S-Y-S-C-O. There it is, down the bottom. It's a North American food service operator. It's the largest in the United States. It's got 425,000. I was about to say 4,250. No, 425,000 customers, which are, of course, as we've been implying, restaurants, hospitals, schools, lodging establishments, that's like, hotels, B&Bs, that kind of thing. It's headquartered in Houston, Texas, has a market capitalization of $29.9 billion. So that's not enormous by US standards, but it is the largest and definitely the largest listed entity within this space. Price to earnings ratio of 32.1, dividend yield of 2.35, trading at an all-time high, benefiting from this trend we've been talking about. How does it look to you?
It looks very interesting. I mean, it is definitely a defensive sector. But being a distribution business, of course, they have very, very high fixed costs. So I think what you really need to do is you need to try and spread your costs.
So what are the fixed costs?
Well, your warehousing,
trucks,
your vehicles, and all the different depots. So depending on which model you use, your fixed costs tend to be quite high.
Yeah.
So essentially what you want to do is you want to try and spread those fixed costs as large a base as possible. And that's why you need to be as efficient as you can be. And I think they've really invested quite aggressively into that technology to try and bring down those costs.
I want to bring up the technology thing. So there's Sigma Network, excuse me, a bit of a frog in the throat. It's like the customer who maybe is, someone who's running a hamburger joint or some individual independent food has got an iPad app or an app that they can use on their phone. They literally order up the patties, the bread rolls, the lettuce. Everything arrives on the truck in a pre-prepared format that makes it very easy for the restaurant just to push that stuff straight through the kitchen. And the back end that Sysco runs then obviously has to take account of that in order to get all the stuff in the right place at the right time.
Sure. So it's a massive inventory management system. I mean, it's very, very complex, as you can imagine. I mean, there are 425,000 customers, and I think they supply over 400,000 lines. So it's tremendously complex, but they do have those systems.
Mostly in the United States of America, though, North America, they've got a few sort of bits and pieces. They try to buy US Foods, which was their other competitor, which is also now listed, but that was blocked by the US antitrust authorities because it said then they would have had 75% of the total market in the US. So it's interesting. It strikes me the next thing this company could do would be to go global, which is an interesting proposition.
It definitely is. And I think that scale that we're talking about, I mean, and I think that's why you see so much M&A within that sector. I mean, you really want to grow your scale to become more efficient, to be able to drop off and supply more routes more efficiently.
And as we'll see in a minute, this business, this sector of the economy, there are lots of small companies. Because at the end of the day, it's one guy in a truck, and a plant and a facility. So globally, there are lots of potential acquisition targets for food services giants.
Sure. I mean, it's still very, very fractured, but that gives a bit of bargaining power to a company like Sysco.
Let's have a look at the all-time high share chart that I was talking about. So there you go. It literally is trading as high as it's ever traded. I think it traded at $53 once, and now it's at $52.70. So the question is, fairly expensive, obviously doing well. What does one say here, hot or not?
I'm hot on the company, maybe not hot on the price.
Yeah, so you're just a little bit anxious about that coming in. Now, I'm hot on it, all fronts, all systems go. That's the kind of story I like.